Hello everyone, this is Regression here. Today I am going to present the trend trading toolkit. Okay, in this trend trading toolkit we are going to find the systematic way to find the trends in the market. Okay, trend is very important for trading. We are going to look at the way how we are going to find the systematic. Okay, legal disclaimer. So before going to the presentation, I wanted to briefly talk about myself. I'm Regression. I am by trade I'm a mechanical engineer, and I hold the MBA University of Hull from University of Hull, UK. I've been trading since 2009. I've traded US options, and I also traded forex in Australia. Since 2018, I've been trading in Indian market. I'm also teaching the same thing what I trade here in Indian market, that I'm also preaching to Indian students here in India overall through online as well as the workshops manner. I've also been presented a couple of online workshops and seminars. So via Quants League, Market League, Define Edge conference, and I'm also featured in Money Control. Let's move in. So what is today's content? So today's, overall this series is going to be only this framework. This is my framework, trend and then momentum, trigger, follow through. Today my objective is to explain about the trend and its hypothesis. So we're going to find the trend in an objective manner So let's look at the details in the next slides. Okay. So just note it down. There's a trend, a momentum, trigger, follow through it's kind of my go-to method. Trend hypothesis will be covered in today's session, and the momentum is going to be the tomorrow or day after tomorrow, and then trigger we're going to explain the multiple options, and then follow through is nothing but the trailing stop, push in size, money management. So this is the follow through exit mechanism. So the overall these four things is exactly all you want to know. I hope that by end of this series you will have your own trend trading systems. Okay, let's move on to the next slide. Trend hypothesis. What is trend? According to the Investopedia, a trend is the overall direction of a market and asset price. In technical analysis, they use the trend line or swing low, swing high to measure the trends. Okay, many traders follow the trend. Some people will do the contrarian to seek the reversal against the trend. Okay, but one thing I wanted to mention here: trend is a lagging. Okay, trend is a lagging. What I mean lag is after establish the price, then only you will be identifying the trend. Okay. So it's not that initially you will figure out before that's happening, or it is hindsight view, divergence or nothing. So trend is always lagging. You should know that it's a trend trading. You will be entering the after established trend. Okay, not that prior to that. Okay, let's move on to the next slide. Okay, as I said, trend is your friend, and which time frame you to look out the trend. Okay, so are you going to look at the 1 minute time frame, or 3 minutes time frame, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour, daily, weekly, monthly? Because these time frame, every time frame has the different types of traders, right? 1 minute and 3 minute, all of them this kind of time frame, typically the scalpers area. 5 minutes, 15 minutes, that is 30 minutes and all, then a kind of day traders area. 1 hour, 4 hour and all, it's kind of positional swing traders area. Daily, weekly and all positional, right? So where do you want to look at the trend? You wanted to look at the 1 minute trend, it will be choppy and you will not find the trend. Okay, most of them are noises. 3 minutes, you may find it a couple of bars and couple of areas, but may not be sustained. 5 minutes, yeah, there is possibilities. 15 minutes, yes. 30 minutes, obviously you will see the trend, and the higher time frame that you have, the more quality of the trend you will see. Okay, what I mean is The 30 minutes time frame may little have a choppy, but if you look at the daily time frame, weekly time frame, you will have the quality of the trend, and the trend will be continuing for multiple weeks and multiple months. So that is the trend that you wanted to ride along with it, okay? Not that 3 minutes time frame or 5 minutes, and so that you'll have a umpteen stop loss will get hit. So always you will be looking for the higher time frame trends, and remember the trend is lagging, okay? Let's move on to the next slide. So we have looked at what is trend, and we also looked at what is the time frame. We will be looking at the trend, okay? Okay, so what are the methods to find the trend? Okay, so there are so many methods to find the trend. I've only mentioned a few methods that I think that it is one should know. Okay, higher high, higher low, it is an objective method, but you have to have a trained eyes to find out the higher high, higher lows. Okay, and then 50 SMA filter, this objective, it is pretty easy to find out. 200 SMA filter is pretty easy to find out. MACD above 0, it is easy to find out. CCA above 0, it's easy to find out. Trend line, again, it is a subjective, it's not objective, and you need to have a trained eyes. Okay, channel, like this is a price line channel or linear regression, it's objective. If you apply that, it will be seeing that trend. MAC is nothing but a moving average channel. Okay, that is also objective. So we're going to drive deep into each of these types of trend identification. Let's move on to it. Okay, so what you're seeing at a higher high, higher low, swing high, something like this. This is a lower low, and you're looking at the lower higher high, and then higher low, higher high. So in this context, once you're making higher high, after making it A, B, C pattern, then you'll be figuring out this market is trending up. Okay, so this, as I said, you will only know the trend after making it. Okay, after started making trend. Okay, you can't figure out the trend is about to happen. So after established the trend, you will be able to see the trend. Okay, so this is one of the very famous method. This is also known as a market structure or Dow theory. Okay, you can call it as a Dow theory or market structure. For me, it's a market structure because the previous high has been taken out, so market is moving above, so that it is a market is trending. Okay, that's what it is. Let's move on to the next slide. So in this method, we have looked at the chart and how we are going to mark the higher high and higher lows. Okay, same thing for lower side, opposite side, making a lower and breaking the higher low, and then making lower and making a lower low, and lower high and lower low, lower high and lower low. Okay, this is how it works, and as I said, after establish only you will know the trend, and then you will be trading the meat of this area. Okay, you will be, after establishing the trend, you will be figuring out and you will be trading this meat of this area. Okay, so you will not be trading the top and exactly the bottom of the trend. Okay, that is actually objective of the trend trading. Okay, let's move on to the next slide. 50 SMA filter. So you go ahead and apply on a daily time frame, and then apply 50 period SMA filter, and pretty easy. And anything above it is above the 50 SMA, it is all bullish trend. Anything below 50 SMA, it is all bearish trend. It is pretty straightforward. It's subjective. Okay, and it is backtestable. Okay, but higher high, higher low, not that easy to backtest. This one it is not easy to backtest. You have to apply every time a higher low, or some kind of a fractal indicator to apply, and we have to do a backtest. But here in this case, you just apply 50 period simple moving average, and you will know that it is above the market is above the 50 period SMA, so that market is trending up or market is trending down. And it is pretty easy to do the backtesting. Same thing for 200 SMA. It is also popularly known as a 200-day moving average. So it is pretty lag. It's lagging at like too much lag actually. So but many people, investors, try to use this 200-day moving averages. So market is above it is 200-day moving average, consider as a trending up. Okay, same vice versa, if below the 200-day moving average, it's going to be the trending down. Okay, so it is objective and it can be back testable. Okay, so now we're going to look at the next method, is a MACD greater than 0. Okay, we are looking at the greater than MACD indicator on applied on daily time frame chart, and anything above this, if we consider this zone is a trend, this zone is a trending up. Okay, this zone is a trending up, and this zone is a trending down. This entire zone is a trending down. If you look at the price also, it is exactly trending down. From this area is trending up, from this area is a trending up. Okay, so pretty easy to find out using MACD greater than 0 is a trending up or trending down, but sometimes not exactly that, below the 0 exact. Sometimes it will be very choppy, and then you need to pay the price for the trend trading. Okay, let's move on to the next slide. CCA greater than 0. CCA, you may apply CCA 34 or CCA 50, and greater than 0, it is considered trending up. Similar like MACD, so trending up and then trending down and then trending up. Okay, so pretty easy to apply. If CCA 34 or CCA 50 is greater than 0, it is considered trending up. Okay, this is another indicator. Similar manner, you can use awesome oscillator. Above the 0, it is considered trending up, and below the 0 is trending down. And trend line, this is again, it's a subjective method. It's not easy to do it. You need to have a trained eyes. So I don't recommend to use this kind of methods unless you are a professional. Okay, price channel and regression channel, this is an indicator. Just you apply it, it automatically fetches the 1 standard deviation, 2 standard deviation of price line, linear regression, and apply the trend line. Okay, so basically price channels. This is pretty easy and it's objective. Okay, and MAC moving average channel, it is a 10/8 as just applied it. So this is one of the famous trader known as Jack Bierstein. His method of applying trend trading is, apply the MAC 10 period of SMA is applied on lower value close, and then 8 period of higher values are applied as a kind of maroon value. It is considered MAC. So anything above this MAC is uptrend, anything below is considered lower trend. So this is also objective. You can test pretty much in any charting packages. Okay, so what we have learned in this trend trading method, we have learned, we come to the summary. We have learned trend is your friend. It is always good to know the trend. We also learned that trend is lagging. It is always know after establishing the trend, not the prior to that. Okay, so always always check the trend in higher time frame, because the trend will be higher time frame, we will have a smoother trend. Okay, not in the lower time frame. Use the objective methods to identify the trend. So I have shown a couple of methods in this presentation, either MACD above 0 or EMA or SMAs to find the trend. Okay, so that's all, folks, I wanted to cover today. So we have covered a lot of methods today and identify the trend in objective and subjective manners. So do follow my YouTube channel, and if you want to follow in Twitter, check out Trendrooster. Okay, thanks and bye bye for now.